We are here on this amazing day, everyone. This is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back down to business. Alright guys, we are checking out CHF JPY. That would be the CHF franc versus the Japanese yen. So the first thing we're going to go over is figuring out Forex 101, identifying market structure. Number 2, identifying overall trend. Number 3, identifying SR lines. Number 4, identifying patterns for entry. So let's start off with market structure. Let's see what's going on in the market on CHF JPY. So back in May of '93, market started off here. Back in '93, the market started off here. It went straight into a push down, created an area of support. It started off with an area of resistance. From there, the market pushed up, created new areas of higher highs. Had another second push up, broke through the areas of resistance, created a new area of resistance here. From there, the market basically consolidated, went down, reached area of support. We see a W pattern in this. The market pushed up, retested previous areas of support right here, and then did another push to the top. Market exhausted itself in this area here of this resistance. The market wasn't able to push up higher, so the market pushed down. Pushed down to a point where it created new areas of support right here. It touched new areas of support. Wasn't able to break down further. It did look like a triple bottom here. 1, 2, 3. Market pushed up, retested previous areas of support to push up further. Got another push up. Market came down, retested previous areas of support here. We got one more push up for the top. Markets reached areas of resistance, ran out of momentum, wasn't able to push up further, so the market came down. Came down to a major area of support here, which we can see that the market has a few pins to the bottom here, a few pins this area here, and a few pins here. That's what the market, what it's tried to do was the market looked like to try to push down to come up, to retest here to push up further, but it came back down to previous areas of support. The push up once again, ran out of momentum. This is why we see this long antenna right here, this antenna. Let me go back a little bit. So this antenna here shows me that the market ran out of momentum, so it wasn't going to push up further, so it was going to do a drop. So once it did another drop, we can see that W formation. It pushed up higher. So when it came down here, it was able to regain momentum, pushed up for that W, retested areas of previous support to push up further, and we got about 2-3 pushes to the top. From there, it made it to the areas of resistance, wasn't able to break. We see a long wick right here, and we see a wick coming down this way. This will show me that if the market doesn't break above this wick or some type of body keep on forming up, it's not going to go up further. So this wick created that area of exhaustion. From there, the market came down with a long wick to the antenna to the bottom here. It did the same thing. So either the market was either going to break up, break down, or break sideways within this range. So if we come here, we can see that if we grab this wick here and go across here, and we grab this wick at the bottom, the market is putting itself was trying to put itself in some type of range. It lost momentum here, came down, pushed up a little higher, came down, full drop, hit a major area of support, lost exhaustion, and then the market tried to push up. So we see one push up, two push up, lost momentum, went back down to previous area of support, did third push up, was in the same area of resistance, so it's not breaking past this resistance line to break down further. And now we see all these pins down here, pins here, pins here. We have some antennas down here. So it's showing that the market may either try to break up or break down in this area here, and that's market structure. So what we're going to do is we're going to clean our screen. We're going to clear up our screen. Okay, so now next we're working on figuring out identifying the overall trend. So the way we identify the overall trend, what we can do is we got to figure out what's going on on the monthly time frame. So in the monthly time frame, you want to find out where's price action. Price action is this last active green candle right here. Okay, so now we're looking for our overall trend. We're going to grab our trend line so we can see that price action's here. So the first thing we're going to look for is our overall trend. We can see that it's in an uptrend. So we'll start it off from here. Let's see if we can take it to the top here. From there, we are looking for identifying SR lines. So the monthly, the way we can identify SR lines by starting off with an SR line that's near price action or near levels. So what price action is, we can see it's trying to break some level right here. So if it breaks through this level here, it's going to head up to the next level, which would be here. If we felt that the market is going to go down in the opposite direction, we can place one about there. So if the market breaks up, it's going to go head to this green line. If it breaks down, it's going to head to this resistance green line. So we're not done with the SR lines. We're going to continue the SR lines on the weekly. And what we're looking for is levels on the weekly time frame, and we're going to place SR lines between our green lines with blue SR lines. So I'll grab my blue SR lines and we're going to So my goal here is to touch as many peaks as possible, or inverted peaks, reverse peaks. Try to touch those as well. And then once we start adding our SR lines on the weekly time frame, we can start seeing, we can probably start seeing patterns. So we're going to head over to price action, and we're going to take a closer look at what's going on in this area of price action, this last candle. So we can see a pattern form. I'll draw it out. So what the market did, it came up from the bottom, lost momentum, it created an area of resistance. So the market lost momentum, it came down for that drop, it created a strong area of support here. Now we see that first leg of the W, we see the second leg of the W here, there's a third leg of the W, and then once we get that third leg of the W, we start looking for entry for that fourth leg. So once we would have caught this last candle here, green candle, engulfed over this one, we'll took entry here and rode that up to this level here. So then we had that pushed up to the top, that created the W. The W is retesting previous areas of support to push up higher. So now we have to see if this candle is going to break through our green SR line. If it does, it's most likely going to break out, retest, and shoot up further. If not, it'll break out, go to the next level, then come back down and retest again. Let's head down to the daily time frame to see if we can see any more patterns for entry. So here we can see that on the daily time frame, we can see the W formed somewhere here in this area. And if we go down the time frame lower, it's probably another W here. Something's going on in this area. Retest, pushed up higher. So you got a W slanting down, a W slanting up. And then we have that breakthrough with the retest. Now we're looking for the market to push straight up. Once we see this move, that's full entry right there. And we'll take it to the next level. So from here to there, that will give us an estimate of of about 161 pips on the way up. So we're looking at 161 pips on the way up. If we found the engulfing pattern or some type of pattern that will indicate for us to jump in this trade for this buy. This is an amazing trade for 161 pips. Okay everyone, this is Cam Jones, FX Daily Analysis, and thank you for watching.